Hi everyone, let's cover my Elliott wave scenarios on Bitcoin on the 4-hour time frame. Now there's a few scenarios as you can see in no particular order, but at the end of the video in the probabilities and polylines section, I'll make it very simple so you know exactly what we're looking for. Starting with the most bullish scenario here where your low is in at 91.1k and you look for impulsive continuation. This move to the upside is then counted as an impulsive wave 1. Preferably a now finished 3-wave corrective structure in a wave 2 on top of this support and also touched the 0.786. And the 0.786 is a common target for a wave 2, but it is your final common target for a wave 2, so preferably it holds. Now after this wave 2, we then look for another move towards the upside. And as you can see here, I got a double 1-2 on my chart. So 1-2 in yellow and then 1-2 in green, and then continue towards the upside. And this green wave 1 then has the blue 1, 2, 3, 4, 5. You can see that over here, the blue wave 1 rejects at this range point of control, which is the point of control of this range here at 97.4k. It's part of a bit of a blue box. There's an area of resistance there between 97.1 and 97.6k. Now after this, we then look for price to continue. For this wide wave 3 here, it's definitely interesting to possibly reject at the daily at 101.4k. So as you can see, the Elliott wave count basically goes level to level. Hit the level, reject, find support again. Of course, we have a nice area of support resistance here. Then another little rejection, continuation, hit resistance, bit of a rejection, next area of resistance, right? It's basically level to level. Now, this area of resistance here, however, is very important. It is the area between 104.6k and 105k. We've been talking about this level for a long time, and that would be my ideal area of resistance for a bit of a bigger rejection to the downside. And if price does reject at this area specifically, then the golden pocket taken from this low to the high is in perfect confluence with this range point of control at 97.4k, which at that moment in time will then be a monthly naked point of control. Because it's now the 19th of February, I would expect this move up and this move down to take longer than the end of the month Feb, basically, so longer than 2 weeks, preferably, because if it is March and we then have the retracement here in March, then this point of control is very likely going to be a monthly naked point of control, which is a great area of support. So by all means, the point of control of this range here, resistance, and then flipping it to support. And then we look basically for continuation to the upside. The resistance here has then been cleared as well. So very interesting scenario, something to keep an eye on, of course. Now, then we get to the triangles. So the first triangle here on my chart is actually quite similar in price. It's just a triangle in this case. So we then have A, B, C, D, E. But look at the orange line in confluence with the green line, right? You can see the similarities. Move up, hit resistance, 3-wave, move down, and then continue. Move up, reject, 3-wave, move down, continuation, right? It's very similar in price action. It's just a bit of a different scenario, as this is then not a wave 1 and not counted as a wave 2. It's counted as an ABC. Now, this only has implications at a later stage. This might be a little bit too early and a little bit of theoretical stuff. But if you count this as a 1, 2, 1, 2, 3, then because this is a double 1, 2, you need a double 4, 5 later. If you only start counting a wave 1 from this low, 1, 2, and 3, right? And not a 1, 2, 1, 2 here, then it means that you have one wave 1, one wave 2, you look for 1, 4, 5. You're not going to look for 1, 2, 1, 2, 1, 2, and then afterwards 4, 5, 4, 5, 4, 5. The more 1, 2s you have, the more 4, 5s you need. So basically this scenario is therefore less bullish. So yeah, this is a triangle. Again, same area of resistance, basically same area of support. Invalidation is the same as well. Then we have this more local triangle. Invalidation is the low 91.1 and the high 102.6k. In this scenario, then we have our wave A to the downside B. Look for continuation of the range. Preferably this wave D. does move to the golden pocket, which, as you can see, is also just above that high. So you can grab the liquidity and touch the golden pocket. The golden pocket 786 area is a common target area for triangle waves. So wave B, wave C, wave D, right, all the way to the 0.5, so 0.5, 786. But golden pocket 786 is a very nice area. You can see that wave B here rejected at the golden pocket. We know that C, preferably in, then hit the 786. And then you get your D, preferably moving to the golden pocket then as well, taking out the bit of liquidity here. But this would cause a continuation of the range and then later continuation to the upside. And then your bearish triangle. So this is a bearish scenario where we then have a three-wave structure, this time labeled as a W, and then A, B, C, D, E. Now this triangle actually is too early to call. You can't give it the highest probabilities. And that is because preferably with triangles, really, you want to see a C, D. I do like a D in, basically. Unless other scenarios start to fail and a triangle becomes like a bit of a last resort, then it's fine to look for a triangle after a B or a C. But this triangle, in comparison to the previous scenarios, is very early, so the other scenarios would have higher probabilities. In this case, we still need to move up, get a C, get a D, and then get an E. So this would continue the range for an even longer period of time before then a move to the downside in a wave Y, where the area of support, main area of support, would be 86.9, 87.4K. Then we have the arguably more bearish scenario, where we then have, again, a wave W, X, and then a wave Y. This is a double zigzag, W, X, Y. So X here is already finished, invalidation 102.6K. Wave A is a diagonal, wave B preferably a flat. Now the most common flat structure is a expanding flat, or afterwards a regular flat. So expanded flat is most common, then a regular flat, then a running flat. And in a expanded flat and a regular flat, you do like to take out this high, as you would count it as a wave A, B, and then a wave C. Now this then means that C takes out this high, which would be in confluence with the triangle scenarios as well. So taking out this high would be nice for B, and then you basically look for a rejection again towards the downside to move into the 85, 89 area, before then continuation to the upside afterwards. Most bearish scenario, lower probabilities because of the expanding diagonal, but I have to cover it because that's Elliott wave analysis. We have our different scenarios and then we know what has higher or lower probabilities. But basically here you have a diagonal in a wave A, a little bit different. Instead of the diagonal ending here, it now ends here. So we have a WXY, which is a flat WX and then a Y zigzag. Then you need to count this as another 1, 2, and look for 3, 4, 5. But this wave 1 is then an expanding diagonal, which is very rare, never preferred unless all the other scenarios fail. So it doesn't have the highest probabilities, but it's good to know about, I suppose, nonetheless. We also have some news today, Wednesday, February 19th, 2:30 p.m. Central European Time and 8 p.m. Central European Time. So make sure you trade safe, as it can increase the volatility on the chart. And on Friday, we have some news as well. Now, I will be live at 2:30 p.m. here on YouTube to observe that reaction and see if anything happens. On Friday, however, I will not be live because I will be in the US for 2 weeks between 20 and the 6th of March. I have a meeting with Robert Prechter, founder of Elliott Wave International, author of Elliott Wave Principle, and I'll also have a couple of other meetings and things set up. So I'll be gone for 2 weeks. I will try to provide updates whenever I have the opportunity, but just know that it will be less than what you're usually used to, that for sure, and maybe nothing. It really depends on also the Wi-Fi and all the other stuff, right? Now, on the 6th, I'll be back, so that's when I can for sure then eventually create an update, or at least the 7th in the morning possibly. But also on the 7th, I will fly to the Netherlands, and then between 8 and 15, I'll be gone on winter sport. So it's going to be a bit of a volatile time the upcoming weeks, but just make sure that you know that whenever I have the opportunity, I'll make an update. So this is the probabilities here. From an Elliott wave point of view, the colors have no particular meaning, but basically what is most important here is that in most of these scenarios, we are looking for that high to be taken minimum, 98.9K, right? Invalidation, of course, is taking out this low, and then we basically take it from there. Now, we do know that a lower probability scenario is this scenario here because of the expanding diagonal, right? We know that this triangle also has lower probabilities because it is very early to call this triangle before the other scenarios. So basically, it's interesting to keep an eye on the bullish scenario, keep an eye on this triangle, right? Keep an eye on this triangle as well, preferably take out the high. Those are your higher probability scenarios. And also this one here, right? Where we preferably take out the high, and then this reaction to the downside should be impulsive. And that's the biggest difference between the really bullish scenarios and bearish scenarios, is that if you do take out that high, preferably for an expanded flat here, you want to see an impulsive move down, right? A, B, and preferably a very quick C. So 1, 2, 3, 4, 5, right? A quick dump, high amount of volume, grab liquidity, go back up. If this is going to be a very slow three-wave corrective structure, we look for price to continue to the upside, take out the high. Right? That's the main difference between the bullish scenario basically and the bearish scenarios where you do take out this low. So that being said, I hope this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.